Okay, everybody. Okay, so what's going on? I feel like today is the day. I feel like today is the day. Okay, so a lot of good price action, I feel, and I feel like there is a sense of excitement again. Is there anything happening today? Not really. A little bit, just a 5% up. No big deal. I feel like, okay, hold on. Let me just try this, what is this? Directional thing? I have no idea how to read this, so I just feel like putting on there for people to see. Momentum, maybe. Let's try that. What else? High cycle, top. Oh, okay. Smart money index. There's such thing. I don't know. Ring failure. Okay. Volatility stop. Vortex indicator. There's too much of these things, you guys. I'm just testing out. Now, what does it mean? Maybe this is the indication that smart money is buying. Who knows? I mean, okay, so we have been on an uptrend quite a bit now. This is a weekly candle. You could see that throughout the history, okay, look at this. This is, again, smart money. This is not retail, you guys, okay? And you could see it here. Now, again, I don't know how to read this index here, but just make an assumption because based on, just my own opinion on things. Since nobody watching anyway, so let's just you and I, just you and I, you, me, and myself here. Okay, so you see that smart money is buying, they dump, buy, dump, buy, dump, 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 and then they buy here. Okay, and then it's been falling off. Smart money selling. Okay, and then they buy here. And then it's just like trending down. You could see that it's been trending down. Okay, smart money is not buying as much. Now it's been perking up, right? So there's a capitulation since over here. Okay, you could see that on this chart right there. But all in a while though, you see a lot of OBV type thing. I think Moran's show that indicator. OBV. This one is what kind of like mind-boggling to you. It should be, right? Because while smart money is dumping, retail is not selling. Isn't that weird? Isn't that weird to see? But anyway, so shouldn't that be like flip? So let's say compared to, I don't know, the best stock ever, right? Apple. Apple seed, what? I think this is it, no? Apple. I think this is it. But for some reason it's not showing. Oh, AA. Who would have thunk? Who would have thunk? Okay, there you go. So there is a discrepancy for sure. And this is why I feel like it's a smart money's been dumping, meaning institution has been selling to retail and retail's been hoarding it. I think that's what is happening with GameStop. While smart money been buying a lot, and that's why you see that smart money index moving up rather than down. Anyway, the point of showing that is to get you to see the reference here. Okay, now what have you seen lately though? Okay, what have you seen lately on the smart money index? Now they began to sell out of Apple. Yes, there are times when it happens over here too, but I feel like this trend is going to continue. Okay, can they? I mean, because again, they have exposure in China. It's very, very testy right now. And so yes, risks are placed in the top magnificent company out there. This valuation, I just feel like, Anyway, so that's that. But let's go back to GME real quick. Today was very encouraging. I see a lot of excitement coming back to the stock. A lot of insider buying, and of course, retail is ready to go. One more round. Who knows how long it's gonna run until people understand that this company is trying to do something, or it's about to do something, right? Even with that, price action, you don't see much volume though. We need a lot of volume, much more than this. And so it's very kind of too quiet. And I'm thinking, okay, so why is it so quiet? But let me look at this real quick because I don't know if I'm grabbing the right thing here. Okay, 1 second. Quiet. Okay, so I do have the right one there. Trying to see. Okay, so been listening to a lot of like economic stuff and having to do with Bitcoin and all that stuff. Very, very exciting about that development. And I think it's going to continue. A lot of people have this M2 money supply thing that is perking up like crazy. And so I feel like we are due for a run. I'm expecting like May, sometime in May, June, July. I feel like that's the M2 global money supply is gonna perk up again, and the Fed's gonna print the money to support the market. Whatever downturn, whatever swap data that needs to be done, I feel like it's going to happen. You feel a little bit different this time, yeah? How so? Because retail is armed and ready to go. We are ready. I don't know. I feel. Oh shoot! Keep forgetting to do that. I don't know. What else to be said about this company? Come on. I mean, Jimmy against the world, right? I still feel like people still in disbelief that well, they will be when when they hear it on the news again. retail investor is at it again, whatever the narrative is. And then they're going to be baffled. They're going to be like, why is this stock move so quickly? And, no one see this coming. Yeah. And then there would be a group where they're going to be like, Roy Kitty has less and less effect on the stock. Look, it doesn't move much. Without realizing that retail investor has been so mature now, we're like long-term shareholder. We're no longer just sell in and out at will. And of course, with that stability, right, it's harder for market maker to find seller. And so they will try, slowly try to inch the price up. And if nobody's selling, like Ken Griffin was saying, they front run whatever the seller wants or a buyer wants, and then find sellers later on. Okay, until they couldn't find seller anymore, and then they have to bump the price up, right? So they will sell the share to you first, then find seller later on. Real sellers. So again, mechanism, right? With that understanding though, market maker will always sell the shares to you at the low. In my opinion. I don't know. Just like Carter was saying, like every time you buy, like you feel like you're stealing it from someone, right? I like that line actually. It's like, yeah, of course. Yeah. The sentiment, of course, again, if you understand the company, right? Understand the long-term, trajectory of this company, you do fine. You will do much, much, much finer than, and of course, the same way with Bitcoin as well. The same exact thing. Of course, Bitcoin's gonna, shine a lot brighter, in my opinion, in this, by end of the year. Simply because, again, nation state and so many hyped up entity that are, ready and armed to go pump, the crypto industry. So it's going to be crazy. It's going to be wild. So be ready for it. And whoever wants to, do some research on crypto, I advocate that. All right, you guys, I'm a bit kind of out of it today. I feel like work, it's not too bad, but I feel like I'm so busy. And I'm like running crazily, and then I didn't even see the price action until the end of day. But anyway, feeling a bit under the weather. So gonna be a little bit short today. Apologize for that. But tomorrow morning, if I feel inclined, I might come on tomorrow. We'll see though. Say less, say less. All right. Did you see Moran's second video on Connect the Dot? Yeah, that was it's like a podcast, right? I did immediately actually. Of course, like at work, I always have him on my ear. So it's very refreshing to hear somebody else talking about the work that he's been doing, and Connect the Dot is his pride and joy, and it should be, obviously, and very glad that other people are beginning to kind of give him that credit, and much deserved though. And then I want more and more people, like the information is what is important, obviously, credit to him, but the information is what important about what has been happening to the American's company. And it's been happening over and over again. But for some reason, again, because I'm sure there's a lot of private equity that is working in the White House right now, why do you think they have so much money and they don't have any, allegiance to the people anymore? It's all about money. Okay. Who create the most money? Who could create the most whatever, right? And so if you have money, you have the most voice. Okay. Money talks. Okay. And so with that structure being set up, unless you take money out of politics, you're going to continue to see this thing that is happening. And with these people have the power of money buying everybody, do you think it's going to be like a good situation for any company, for any entrepreneur, for anyone who try to build a company from the ground up? No. There's a lot of egregious tactic that these companies are trying to gobble up a lot of market shares on the company. Not only just the company, it's like on the economy altogether. I think Stephanie or whatever her name was talking about private equity. I think Morantz also talked about that one. She talked about how these private equity now, they would, buy the mom and pops. Let's say take plumber, for example, any service-based business. And they would, buy the small company and make it as if, make it look like it a family-owned small businesses and all that stuff. But then they buy a whole bunch of, like plumbing services. And what they would do is they would increase the price. Every time you call somebody, right? You thought you get the second opinion, but you don't. You get the same quote, or some of them even higher. And so there's no true price discovery per se. There's no deal to be made among, like, maybe somebody could do it cheaper. But, you have the illusion of choice here, but you're actually picking the same company that, kind of owned by the same person or same firm or whatever. And so they're kind of hijacking the supply in that sense. That that natural supply and demand in the market is not there anymore. It's all, I guess, racketeering. I don't know. Like, it shouldn't be legal, but for some reason, again, nobody go after them. No consumer protection anymore, it seems. Just anything goes, I guess. And it's frustrating because, as people, no wonder everything goes up in price, right? You kind of see it now. It's happening. And my insurance went up 11% last year. It's like, what? Huh? How? And so everything just went up like crazy. And then you don't understand why. But people, I don't know. It's tough to kind of want to fix that unless, we are more and more people just do business and flood the competition in some way. But again, if your business is not working out because of the Federal Reserve, like how can you just, run? You don't run fast enough. You're going to get bulldozed. And so again, that's why I think Bitcoin is going to be the only hope, for humanity right now. And so I'll get some, I just watched Lynn Alden, and she said, well, I wouldn't be, I wouldn't say that you should own 0 Bitcoin. You should own something at least. Just something, $100 if you feel inclined. But, there are people who are like, well, if you have just 101 Bitcoin, I think you'll be fine. It's like, okay, hi. I feel like that's the whole general idea. At least have some Bitcoin. Don't not pay attention to it. But if you want, GME in proxy, you are actually owning Bitcoin already. So you're okay. Just buy GME. It's actually not financial advice, obviously, but I feel you could not do no wrong with GME. And GME is also another leverage to Bitcoin too, if they are doing anything like MicroStrategy, right? All right, what is happening? Is it Monday yet? No, not yet, Michael. You could go to sleep. I'll wake you up when it's Monday. Let's see. Hello. Okay. Why RK did what? Okay. Did he? I don't know. How would I know that? Maybe he has. Maybe he's been betting. Who knows? Maybe that $1.5 billion that we thought was GameStop was actually Roaring Kitty. I mean, that would be wild, right? Let me see. They do that with a lot of healthy food brands. Of course, right? And how can we go after them? Like, somebody should investigate or something. But again, the investigator is probably paid by them too. So, what is this country devolve into? I don't know. I think morality really matter. Like, at some point, you're like, how much money do you need? Goodness, Anyway, let me just get off of my soapbox. I'm sorry, you guys. I'm very low energy today. I'm trying to come up here and then, just try to do the show. But I feel like I'm putting people to sleep, honestly. Anyway. Okay. Before I put you guys to sleep, let me kind of give you this info real quick, because I feel like you guys look at X a lot, right? Wait, that's not the one. Goodness. Hold on. Let me just, I don't want you guys to stumble with me here. There you go. This is the one.
Master Control MX, the manufacturing execution system that delivers.
Preparing a
So, this video was done 3 days ago. So, speculation? I don't know, but I really feel this is coming, you guys. So, a wall of money, global money supply showing it. M2, if you don't want to, go look at it yourself, it just means the amount of money slushing around in the market currently that is waiting to do something. Trillions, okay? And you've heard about them trying to bail out hedge funds and all that stuff, right? And let's listen in. I know it's only like 13 minutes, but I'm gonna speed it up a little bit. I'll come out in a bit. Okay, I'll be back.
$1 bailout, and it's all because one of Wall Street's riskiest hedge fund trades is imploding fast. While stock markets whipsaw and trade war tensions with China escalate, a much bigger crisis is brewing just underneath the surface in the bond market. But this isn't just a problem for Wall Street. Hedge funds are blowing up, liquidity is vanishing, and the Fed is eyeing a multi-trillion-dollar injection just to stop the bleeding. But if this spiral continues, we could see mortgage rates rise, retirement counts disappear, and even bank bail-ins threatening you and your financial security. So how did the safest asset in the world, U.S. Treasuries, become the epicenter of systemic risk? What does this fallout mean for you and your financial future? And most importantly, how can you use this knowledge to protect yourself before it's too late? Let's get into it. In case you missed it, last week I reported on a massive vulnerability in the U.S. Treasury market that almost no one is watching, the hedge fund basis trade. Now, it sounds boring, safe almost, to exploit tiny price differences between U.S. Treasuries and futures, But here's the problem. They're doing it with massive amounts of borrowed funds. We're talking 10-to-1 leverage or more. These hedge funds, they're betting hundreds of billions on what should be tiny, stable spreads. In fact, these hedge funds now hold roughly $1 trillion of U.S. Treasury securities, meaning that they account for 11% of the entire market alone. So if they're forced to unwind, the exposure could balloon upwards of $8 trillion. Now, typically, when the stock market plunges, we see money flood into bonds as a safe bet. But this past week, we've been seeing the opposite, a bond market sell-off, causing a lot of volatility. And for these highly leveraged funds, any small shift is dangerous, but this kind of volatility is deadly. So who is selling and causing all of this? Well, this is where the plot thickens. See, as trade war tensions with China grow, it is the lenders behind the hedge funds, these large financial institutions, who are getting spooked about being paid back. So they are pulling liquidity from the hedge funds. They are saying, no more, we're not going to roll over these loans. And they're issuing margin calls, essentially demanding that the hedge funds put up more collateral. And as you can guess, these over-leveraged hedge funds, they just don't have it. So what are these hedge funds doing? They're initiating their own doom loop. They're scrambling to raise cash by selling off the only asset they have left, U.S. Treasuries. Yes, that's right. The safest asset in the world, U.S. Treasuries, is being dumped en masse by hedge funds. But this...
And again, also exacerbated from China dumping their bag as well. This is the doom loop that we've been talking about, right? Even the most pristine collateral in the whole entire world, okay, cannot withstand this. Yes, Bitcoin's going to step in, I know. But with all the freakiness that's happening, just prepare yourself. Yes, even Bitcoin can crash, but you know what Bitcoin is. GME, the same thing. Yes, GME can crash, but you know what GME is. That's why research is important, you guys, okay? These unwinding of positions and all that stuff, it's just temporarily. And this is also another important fact too, is that that's why money is king. Okay, cash is king in this environment because they need freaking cash. And they are willing to pay 5%, 10%, maybe 15%. Just that temporarily thing. Can you imagine if you lock in on a 15% for 20 years in that moment in time? I mean, is it possible? I don't know. Maybe some company can lock in that rate from the US government for that temporary thing, because the more bond is being sold to the market, the value of the bond goes down. That's why TLT, if you look at TLT, right? I've been tracking it this morning, actually. Because I'm like, oh, this might be the opportunity to buy. You see this wild swing? Bonds don't trade like this, you guys. Typically, they don't unless something big is happening. And so there, I mean, think about this unwinding thing, right? What's happening here? What's happening here? Like something's happening over here where interest rate was raising like crazy, okay? But again, there could be some unwindings happening as well. But note what date it happens from. Yeah, ever since GME. Okay, so ever since GME is happening, you know, the bond has been kind of unwinding. Like they've been selling U.S. Treasury, and it's from hedge fund mostly, okay? Not having enough collateral and wanting bailouts. And again, can exacerbate, like even lower. So just prepare for the worst, hope for the best type thing. I don't know what's gonna happen. I hope it's not breaking to the point where we can't get our money back. But keep in mind too, right? This is the lowest level, so it could hit that still due to the fear, uncertainty, and doubt. More and more, you know, people are not, you know, willing to even buy treasury because they're afraid that if they lock in that amount of money, it's gonna, you know, be a bad situation. even though, you know, the 5%, 10%, 8% or whatever they could get from the 20 treasury can get them. But usually I think the 10 years are the one that banks trade the most, because it has to do with like mortgage rate and all that stuff. So so that one probably swing much more in volatility terms. But the 20 years though, you know, if the Fed were to lower the rate tomorrow, you would see this swing right here go up like that, right? You could see this right here when they drop the rate to 0. And again, for liquidity, you know, this is when the rate is 0, what happened? Cheap money, right? So you're seeing right now money is expensive at this rate, and it's been expensive since here too. What happened over here? Money was expensive. That's why people can't buy houses and Banks was not lending. They're scared to lend the money out because they're like, hey, you know, I need the money for myself. You see a lot of foreclosure now. What happened? Banks needs money. They don't care about mortgage right now at the moment. They want money. And so people are like, okay, I'm going to sell my asset over here. So this is the opportune time for people who've been waiting with cash. Huh? And anyway, sorry. I don't know why people don't understand this potential for GME. I know when people are like, wow, what are they going to use the money for? Okay. I was like, okay, all right, we'll just wait. Can you just wait? Just 2 minutes maybe? Or about 2 months? How about 2 weeks? How about 2 years? I'm like, oh my goodness. So yes, perfect opportunity to have tons of cash right now. Anyway, I'll go back.
Wave of forced selling, while it's creating something we have seen before, systemic risk. The same phrase that prompted the 2008 bank bailouts, except this time, it's not banks, it's hedge funds. And this time, instead of $700 billion, we could be staring down a multi-trillion-dollar bailout. Don't believe me or don't think it's going to happen? I'll prove why it's not only possible, but very likely. First, 2 weeks ago, before Treasury yields spiked, financial experts and insiders were already urging the Fed to create a hedge fund bailout tool, meaning this crisis wasn't a surprise, it was anticipated, and in their minds, they already have the answer, the solution, a bailout. Second, this already happened in 2020 when margin calls hit Treasury futures, the same thing that's happening right now. What happened?
I wonder what happened then to GME, huh? Oh, no wonder insider buying. No wonder. The cats. Yeah, it's crazy. My goodness, I want to buy more calls. I don't have any more. I bought more in the I bought some this morning, and then I was like, towards the end of the day, I sold for a little bit of profit. You know me, when I buy calls, I don't hold it on forever. I didn't expect today to be like 20% up, so I was like, oh, okay, I'm up. Just one call. That's it. Let's see. Only a few have patience required. Of course. I know. That's why I like investing. It's such a a personal thing. I've been, on the market I feel like I'm pretty seasoned, but still I have a lot to learn. And I still have that antsy nature within me to always trade all the time. It's like, oh, what's happening today, right? And again, that's why I divide my strategy to this extent to where, okay, I will have some portion in which I will kind of like, trade in and out and stuff. With options and all that stuff, just to try to beat the market. But then my other portion is like the majority of my holdings, right? It's in like Roth and then also 401k. So I do have some diversified portfolio. It used to be majority GameStop because, it went up more than, but then I kind of like shaved some to go into crypto and, now it's all crypto, that that account that I used to have lots of shares. But I kind of fade in and fade out type thing. So what I should have done is, instead of fading into crypto, I should have put into GME. But I want some exposure on XRP as well because of the good news and all that stuff. So since I already have some exposure in my Roth IRA, a lot of exposure to GME, I'm set for that. The amount of shares that I have. I mean, currently, let me look at that portfolio. And again, guys, you have to divide your strategy in this sense. Don't be just one-sided. Yes, have your conviction and understand what you're investing in, but also have this thought where, okay, what happened if this doesn't work? Will you be okay? My situation is that, okay, if this doesn't happen, then I have my 401k as well. I'll be able to retire at 70 years old, okay? if GME were to go to zero tomorrow. So, by 70, yes, I'll be able to retire then. I know, I laugh because it's ridiculous, right, to expect people to retire by 70 years old. But anyway, so that portfolio now went up to 52,000. What? So that's pretty cool to see. But yeah, I might do a YOLO update on my own here. So, but yeah, that portfolio is in my Roth, so I don't even want to talk about that. But my whole point in bringing that up is that you have to develop your own strategy to fit your own personality when it comes to investing. And of course, always have a long-term, projection to whatever you own. Whether it's Bitcoin, whether it's XRP, it's always good to see. Yes, following all this is fun, but this is only temporarily, you guys. And, as an investor, you need to not that worry, but you need to watch out for this type of volatility, because if you were to buy in at $900 a share, right, and it drops, sharply, real quick, you're gonna feel so bad as an investor. It's like, oh, now my cost average went down, went up, way too up, and so don't buy. If you're an investor long term in this company, make sure that you buy at the bottom, okay, when there's not much volatility at all. And so that's why I always say, buy when it's boring, okay? Don't buy when there's hype to the tilt already. Not to say that, okay, if you want to buy at every price point, that's good for you too. I'm not saying that, but but be smart about it, huh? Now, if you have 30 years horizon, right, you could just do one share a day like Moran's been doing. And then, and then be happy about life, because you own GameStop. But if you want to time a little bit, then buy when it's boring. Buy when there's no one wants to buy it, like this volume right here. Oh, terrible, right? You sit through it and you're like, oh my God, why do I want to buy into this stock? The same way over here. You want to buy when it's boring. This is so boring, okay? Nobody wants it, but yes, people wants it. But anyway, I don't know. Let me just get off my soapbox right now. I'm trying to play with you guys. Sorry. I like to waste people's time over here. All right. So with that though, again, just be careful, okay? When you see this crazy rocket going like this, don't freak out. It's okay. You'll live. You'll live, but yes, I mean, you might see some crazy number over here, okay? But before that happens, hopefully you have some shares to be excited about it. putting enough in it that you're gonna be like, I told you, right? I told you. And then when it come back down, it's like, okay, did you sell? No, but that was fun. Same like here, right? Same like here. I can't tell you how many people that I know they were like, did you sell? I was like, no, I didn't. Sorry. Are you rich yet? No, I'm not yet. But it happens every time. No, it happens every time. I feel like, again, these things gonna continue to happen every cycle. I don't know if it's every 5 year, every 4 year, along with Bitcoin cycle. But if that's the case, you guys, this is why people said infinite risk type of deal. It's because of this unwinding things that is happening. It's not so much about the fundamental. Yes, fundamental of the company helps people convicted in holding the company. Okay? And so with this type of unwinding, GME just is becoming more and more enticing to volatility traders, bond traders who want to short this thing, right? And again, when they add to the short position, that's fuel. Like even more. This is what happens over here. You could see. And again, institution will come to this because they are the only one who have billions and billions of dollars to move this market. Retail don't move the market. Remember that. And so, a couple share here and there that you have, it's not going to move the market. And so when you hear the news saying, oh, retail is at it again, you know exactly what's happening. It's not retail. It's this type of things happening.
The Fed stepped in and pledged trillions. We already know how this plays out. Third, if you want hard proof that something is breaking right now, that it's not just temporary volatility, all you have to do is look at the SOFR spread, the secured overnight financing rate, a key indicator in measuring bond market stress. When it drops, it means banks are panicking, liquidity is drying up, and we are in trouble. Let's look at it together. You can see right here that spread drops to a record low, meaning that the system is seizing up. In simple terms, money is not flowing. Institutions are dumping even high quality assets just to raise cash. This chart alone shows us that this system is screaming things are not okay. But here's the scariest part. The unwind has only just begun, and the Fed.
See, this is why they love to say, oh, price stability is our utmost important thing. Price stability. So that means they're fixing the price, okay, so that this thing doesn't happen. And why do you design a system like that where you have to fix the price or else? Well, then you have to cheat in order to make the market works. That's not how it should be. No wonder, you cannot buy into a house that you're supposed to be living in because it keeps going up in prices. Even though it's like dilapidated, everything needs to be fixed, the windows falling apart, and then you look at the price like they want $2 million on that. It's like, what, huh? Like, doesn't matter what happened. The price has to go up or stay the same. Crazy. Unless something like this happened where, but then we have to bail out these people because you have to. Like, huh? That's why you don't, of course. What do I know, right? The solution is pretty simple, but the solution is going to hurt somebody. Okay, and that somebody is the very people that are trying to fix this thing by bailing people out. And so it's a monster that feeds themselves, but every time they do, your dollar will go down in value. The XY is coming down. That's good for Bitcoin, I'm telling you. That's good for asset class. I'm telling you, that's good for GME because GME is going to get into Bitcoin. The wall of money is coming. So what do? You buy asset. Rush to crypto is actually a smart thing for this administration to at least get some escape valve over here. for people to, again, people follow, or at least trust in Trump to fix this in that sense. I don't know. Again, I don't know how it's going to happen, but I feel like digital currency is the next industry to pay attention to, because it's long term. Okay, this short term downtrend, don't freak out. If you have money, great. Just like Moran said this morning. Okay, if you could weather this storm, you're coming out on the other side, smelling like a rose type thing.
They're cornered. Either way, we lose. If they choose to bail out hedge funds, well, we already know how that plays out. Inflation will skyrocket, and it will be you and I who pay, while those who were reckless with their debt will walk away untouched. But if the Fed waits too long, it puts the entire Treasury market at risk. The Treasury market, which is the underpinning of the global financial system. It would make what happened this past week in the stock market look like nothing. We could expect to see a serious crash. 401ks, retirement plans, IRAs, all that are tied up and rely heavily on bonds, those would all be seriously impacted. We could see credit freeze, businesses fail, and of course, inflation leading to hyperinflation, meaning the cost of everyday living would go through the roof. And yet, that's not even the worst part, because there is one more consequence of this that could change our lives forever. Now, zoom out with me for a second and look at the United States on a global level. It's no secret that for years, nations have been reducing their reliance on the dollar and moving away from dollar reserves. I talk about this all of the time, but now something has changed. Instead of slowly reducing their holdings or slowly buying less, it's almost as if these nations have been given a green light to stop buying U.S. treasuries, that maybe, just maybe, there are safer options out there, and for once, they don't have to fear retaliation from the United States. And stay with me on this one, because it ties directly to U.S. banks and your savings. Now, the U.S. government, they sell U.S. treasuries at auction to finance the debt. Debt that, as we all know, is costing us over $1 trillion annually just on the interest. But what happens when demand for that debt drops? The government has to raise rates to attract new buyers, making the debt even more unsustainable. And that's exactly what just happened. This week, a U.S. Treasury auction saw shockingly weak demand from investors. But when foreign buyers don't step up, guess who is forced to? U.S. banks. This week, U.S. banks bought a whopping 20.7% of total auctioned debt, meaning two things. Number one, global confidence in the United States and the U.S. dollar is weakening. Number two, U.S. banks are now forced to hold all of this unwanted risk. But here's where it gets personal. When banks are forced to buy up all of these treasury bonds, well, what happens when the value drops or volatility increases? Now these banks are sitting on massive unrealized losses, something we've already seen that we cannot afford to get worse. These are the same institutions that are supposed to be protecting our deposits. And under the current rules, it's not the government who's going to be forced to save these banks anymore. No, it's you. Under Frank Dodd, it's you and me and everyday Americans whose finances can be used to plug this hole. Ask yourself, if treasury demand keeps collapsing and banks are forced to keep buying, how safe are your funds in your bank really? And before someone out there says, oh, bank bail-ins, that will never happen, it has happened in Lebanon, Cyprus, Greece, and before someone else says, okay, but that's not the United States, it actually has happened here in the United States. A couple of months ago, a failed Oklahoma bank, First National Bank of Lindsay, they weren't bailed out. They weren't bought out. No, anyone in there who had over $250,000, all of the uninsured deposits were taken to make the bank whole again. Now, I had never heard of this until one of our viewers, Pat, wrote in to tell me about it, because I'm guessing they didn't want it to make national news. But make no mistake, you can sit there and say, well, they shouldn't have had more than the insured amount. But there's a reason that they made sure everyone knew that with Silicon Valley Bank, all of the depositors were made whole again. They don't want anyone questioning if your cash is safe in banks. And I'm not sitting here proposing a bank run, but I am saying this was just the tip of the iceberg. If you think that even the up to $250,000 will be safe, think again. We've seen how bank bail-ins play out in other countries. We know that accounts can be frozen for years. And what happens during that time period? They devalue or revalue the currency, meaning not only can you not access your funds, but whatever you had in there is worth tremendously less by the time you even get access. And that's depending on how much they let you have. And if you still don't believe me, you can hear it straight from the FDIC, the Federal Deposit Insurance Corporation themselves. In one of their meetings, they laughed at the American people for not knowing about what bail-ins were and think it's better that way because they don't want people scared.
I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do.
These are the people who make sure your deposits are safe Let's call it what it is. The government offloads their debt onto banks. Banks then carry the risk, and burdened by the debt with all of these losses, you become the backstop. But while all of this is scary, and I hate to be the one to sit here and tell you about it all, there is one piece of good news, which is that you still have time. Although all of this is happening quickly, we are still in the early stages of this hedge fund wind down, meaning you can still take action. The first thing I recommend is get clear on a plan, have a strategy in place. Make sure you understand the risk that you're up against and how you can not only survive, but thrive on the other side of this. And second, reduce your exposure. When these institutions fail and the dollar continues to lose its purchasing power, you are going to want to make sure that you do not have the counterparty risk that you might have today in dollar-denominated assets. Anything that the dollar touches, you cannot be confident in, right? So for me personally, that means holding physical gold and silver, something that is outside of their system that I know is true wealth that does not carry the same counterparty risk. You can see the writing on the wall. You know what's coming next. You don't need me to tell you. But whether or not you buy gold and silver from us at ITM Trading or from somewhere else, what's most important is that you have it now before it's too late. I highly, highly, highly encourage you. If you do not already have a strategy in place, make sure you get one. That is what we specialize in here at ITM Trading, is helping not only educate people, but helping people create a custom strategy, one that will set you up again for success on the other side, to protect your wealth and to come out the other side stronger. So if you are concerned about any of this and you have questions, or you want to make sure that you have that strategy in place, you can talk to one of our expert analysts. All you have to do is call us at the number below, or you can click the link in the description and set up a time that works for you. You can skip.
Oh, okay. Sorry. That was too long. Sorry. So yeah, of course, the wind down and all that stuff. I think the best case scenario, and I feel more likely to happen, is the bailout, not the bail-in, because again, they don't want people to, go running to the bank and take their money out in fear, panicking and all that stuff. So they much rather do that quietly, and the only quiet way to do it is to print more money. Okay, quantitative easing or whatever they're doing. They're actually doing it like slowly already. It's not going to be like doom and gloom in that sense or anything. But again, the reason why they do this is to do it quietly, so that you don't feel it as much, but you're going to feel it in 5, 6, 7 years down the road, that these bail-ins going to creep in by way of inflation, by way of either, price just keep creeping up until you cannot pay anymore. And so, again, that's why this is the opportune time to buy into, like she said, gold, some, Bitcoin if you want to. Of course, I feel like Bitcoin is going to be the asset class to be in, because it's not cheaper than gold. It has the property that gold wants to be as a currency. Because you could spend it. Yes, you could sell it. It's more liquid than gold even. And there are technically no overhead costs. Because with gold, right, if you want to sell or buy or whatever, you have to pay premium. And the fee that is involved and all that stuff to deal with keeping the physical gold. All of that. So, yeah, Bitcoin is probably the easiest one. And of course, self-custody and all that stuff, need to learn about that as well. Just in case the exchange go under, you have your own coins in this type of environment. Yeah, I know. I trust Robinhood way too much. So I'm thinking about kind of transfer my crypto out of that. But you can. Yeah. But anyway, just prepare you guys. I'm not trying to scare you guys or anything, but Jimmy's gonna be fine. Hopefully. Okay, Jimmy looks good. Starting to buy many dips. Yes. Okay, you're still on Pfizer. Okay, lifts and many more where the company are changing for the best. Okay, cool. All right. I will second that, but only Jimmy though. Jimmy's good. All right, so let's see. Okay, so with that though, just keep in mind, yes, it's kind of close to like 21, you know, what happened in 2021. So maybe buy button get removed again, who knows? Okay, so if you have calls, make sure to take some profit, or, you know, convert to share right away just in case they, I don't know. I have no idea. No idea what's going to happen, you guys. So prepare for the worst type thing. How do you transfer crypto out of Robinhood? Yeah, there's a way. You have to go through the KYC process, and you could send it. Yeah, you could receive it even too. So you could transfer in and out. They have that function now if you want. I just haven't done it yet. So yeah, I've been buying, you know, XRP and all that stuff in there, Bitcoin, and yeah, a lot of crypto stuff. People are upset because they wanted President Trump to get Bitcoin higher, but he has a lot to fix that Biden had. Sure, yeah. I mean, there's a lot is happening, you guys. Like, I feel like the changes is way too big for people to grasp. But I really feel like he had to move that quick. I don't know. Like, I'm not trying to defend the guy or anything, but I feel like, you know, when you are trying to refinancing, what, 6 trillion or something? I mean, how could you do that? So, yes, he manipulate the market in that sense to, you know, kind of cause fear in order to try to drive the yield down. But I think he didn't foresee the you know, the consequences of the yield going up actually because of the winding down of hedge fund. So I don't know, you know, maybe he's breaking something, but again, you know, you have to get leverage out of the system, but I don't even know how they're going to do that. You know, and that's why Bitcoin is such an important, you know, the important thing to at least understand, because you could custody your own Bitcoin, technically, you know, if you want to. And so when you do that, you're taking that risk out of, you know, the counterparty risk that she was talking about, where if you own physical gold, the same thing happened to the gold market, where, you know, you can't buy and sell as liquidly as Bitcoin though. But there will be always people would sell Bitcoin to you because in fear, right? And, you know, the global retail investor, they have the same fear and greed type of thing. So that's why you see a lot of price action that is happening in Bitcoin. So trading 24 hours, very liquid. So people could get in and out very quickly. But that's also good for the long-term investor. You have to be long-term in this, because when people are buying and selling, they typically miss out on the actual reason why Bitcoin is such a you know, good asset to be. And so when they buy at a low, sell at a high, great, right? But when they're freaking out, they're taking a loss, and then come to find out a couple years later, say, why did I buy and sell this? Like, you know, so your loss is somebody's gain, okay? And though, you know, some of those gain, they go back into Bitcoin. So it's like a self-fulfilling loop type of thing. But anyway, just thoughts here. Okay, I was cooking pizza a few minutes ago, but a lot of people, like, there's pizza and they do pay a dividends. Okay. Oh, look at, sorry, it's like cooking. It's like, oh wow. It's like, are you gonna share a slice of pizza? Okay. I don't know what these companies are, so. Hey, what's up, Ricky? What's up? I'm actually getting ready to go. Sorry about that. My stomach is growling. I don't know if you could hear that. So But anyway, yeah, somebody gotta eat though. I might pass out if I don't eat. Okay, we'll fix everything. All right, let's hope. Let's hope. Let's pray and hope that he will. Because it's gonna be United States fell. Like the whole empire is falling. So we need strong leaders. Hopefully, he's gonna be fine. Oh, okay, Papa John. Cool. All right. Thank you. All right. You guys, I will let you go. Might be back tomorrow morning. Who knows? Who knows? Depends on how I feel. But yeah, stay vigilant out there. Stay excited. I know it's up to that point. We always been excited about this time. Perhaps remember, time for you to cover type thing was still in play. April 20th. Maybe that's gonna be the one that is the last to go. I have no idea. So look out for those dates. Perhaps this is going to happen where continue to go up like that, down, and then boom. There you go. Perfect prediction right there. Take it to the bank. Okay? All right. I will see. I will let you go.